Hey guys, this is Tom Sullivan here with Real Talk Investing, and today I'm going to show you 3 different ways that you can get involved in real estate and make money. So today, as I said, I want to talk to you about different ways you can get involved in real estate and make money off of properties. Now, it's not all about the renting out properties and the investment properties. There's a lot of different ways to go about it. But first and foremost is the rental property aspect. And in this aspect, what you do is you buy a property, you either get a mortgage on the property, pay for cash if you have that availability, and then take the property and rent it out. And then what that does is it allows the renters to then pay you, and you take a portion of what they pay you to pay off the mortgage, and the rest of that money you get to keep and put in your pocket. Now, just to give you a quick example of that, it would be like, for instance, buying a $100,000 house. The big thing you're looking for is you want a 1% pretty much margin for the rent compared to the purchase price. So you buy the house for $100,000, you want to make sure you get at least $1,000 of rent. And that's just a broad-based rule. But in that case, you buy the house for $100,000, you're getting rent of $1,000. After you take into account the mortgage and some of the taxes and whatnot, you may be talking $700 to $800 will go towards the mortgage and the taxes and paying all that off. And then you'll keep an extra $200 a month. So with those $200 over the course of a year, you're getting $2,400, and then year over year, you can see those consistent returns. Now, what's great about that method is if you buy a $100,000 house, you're not paying $100,000 for that house. In some cases, you can put as low as 3%, so you can put $3,000 down. But even just to take a general number of, say, you put down about $10,000 on this house, and you're getting $1,000 a month rent, after you take into consideration all of the taxes and everything, you're taking $2,400 home per year. So for putting down $10,000, you're getting $2,400. You're getting a 24% return on your money. And even if you went up to, say, $20,000 is what you're putting down, which is more realistic considering it would be an investment property, you're taking home a 12% return. So a 12% return year over year can lead to drastic amounts of increase in cash flow and then increase in your net worth. So it's definitely a very viable option. Now, the thing to watch out with that is there is a lot of hands-on work and involvement in dealing with tenants, and if you choose to not handle that, you'll have to pay somebody for it, which takes away on your margin that you can get for the property. So the second way that you can make money through real estate investing is through a fix and flip project. And what a fix and flip project is where you buy a house that's in poor condition or is being sold under value, and you take that property, fix it up, and then sell it with an increased value over what the cost of the property was, along with the cost of the repairs. Now, in order to do that effectively, a lot of times what I like to do is take 80% of the ARV, which is the after repair value, and then take into consideration how much the cost of repairs would be and the cost of the property, the actual purchase price. So once again, just going off of that $100,000 number again, let's say that the after repair value of the property is $100,000. Now, since I like to take 80% the ARV, 80% the after repair value, 80% of $100,000 would be $80,000. Now, if I have to put, say, $50,000 worth of work into the house, the most I want to spend on the house is $30,000, so that equals that $80,000, so that leaves me $20,000 that I can make on this property. Now, you could also say the property only needs about $10,000, $15,000 worth of work. If it needs $10,000, you could spend $70,000 on the house, put $10,000 worth of repairs into the house, and then sell it for $100,000, so you make a $20,000 profit. So this is a way that you can make a very quick return. You could do this over the course of a couple months, but there's also higher risk involved. So in these examples, if you buy the house for, say, $50,000 and you only think it needs $30,000 worth of work, but once you get inside it, you see there's mold or there's damage to the foundation or the roof's leaking or the plumbing's damaged, whatever it may be that can increase your costs, that starts immediately cutting into your potential income, your potential gain on the property. And if those repairs end up costing too much, you could actually end up losing a lot of money on these deals. Where it would be if you think the house will sell for $100,000, but you bought the house for $60,000 and you've had to put $60,000 worth of work into it, you just lost $20,000 in this deal. So it's very important to make sure you run through your numbers and have a very good understanding of what it's going to cost, and then also give yourself a little wiggle room or buffer so that way if something is to happen, it doesn't immediately cut out of you making profit, but just may make that margin a little bit smaller. And a third way to make money through real estate is through a method called wholesaling. So what wholesaling is actually where you go out to a potential seller before they list anything on the market and give them an offer to put the property under contract with you for a given price. So to give you an example, it would be like finding a property and talking to the owner and the owner saying, I really want $50,000 for this property. And after having that conversation with them about it, you get them to agree to sign a contract with you that states that you'll go looking for a buyer for them and they agree to receive $50,000 in regards to once the property is sold. So what you do then as an individual is you agree that if you find someone, they'll get $50,000, which is exactly what they want, then you can bring the property to different homeowners, investors, fixer-uppers, different people who like to do flips on the properties and say, hey, I got a great house for you and I'm willing to give it to you for $55,000 or $60,000. And if you find someone who's willing to agree to those terms, you then, are, as the middleman for the deal, get to keep that additional money. So it goes from the buyer paying $60,000, you take $10,000, and you give the seller $50,000, which is what they were looking for. So it in turn allows you to work a deal without actually having to be involved in the deal financially speaking. So this is a great method for people that may not have that much money to work with and want to get started in real estate. You don't have to risk anything. As long as you make sure you have the appropriate contract that says that you have the right to try to sell the property to somebody and find them a potential buyer. And in the contract also state that if after 30 or 60 days, whatever you decide, you're unable to find a buyer, that the contract's null and void with no financial loss to you as the individual. So that gives you a great way to get involved in real estate, even if you don't have much money. So thank you guys for watching this video today, just to take you through 3 methods that you could use to get involved in real estate. Now what you were able to see with these 3 methods is it can go from you having to put none of your finances on the line to somebody who's completely involved in the day-to-day aspects of their real estate. So it gives you a great variety and great places to start. So even if you're not that experienced, or even if you're very experienced, you have a place in real estate to be able to make large returns and income through this stream. So be sure to try to find your groove, find what pathway works best for you, and let me know about it. Let me hear what you're going to be trying or what you've tried in the past and what's worked. So as always, thank you for watching this video, and I hope you will all subscribe if you have not already, and please ask me some questions. Let me know what type of videos you're looking for in the future or what I can do to help you on this real estate journey. So thanks again, and look forward to seeing you next time.